There has been a lot of talk over the years about congressmen and women who magically become the world's best day traders after being elected, and honestly, it's pretty blatantly obvious, with politicians like Nancy Pelosi reportedly getting returns that would send your average Top Step user into an eternal coma. The reason I mentioned Nancy Pelosi in the introduction is because, ironically enough, the bill we are covering today is the aptly named Pelosi Act, or Preventing Elected Leaders from Owning Securities and Investments. Some might say it's a little on the nose, but I find it to be absolutely hilarious for it to be such a well-known issue that they even named the bill after her. I mean, if you look at her net worth from 2008 to 2018, in a decade's time, she went from about $31 million to a whopping $114 million in net worth. To put that into perspective, the reports from some analysts that I found says she's beat the market by 581%. Now, despite the name of the bill and the reported returns by Pelosi, she isn't the only one in Congress making some notable financial moves. Here's a tweet by Unusual Whales showing politicians' trades from 2023, where you can see a mix of Republicans and Democrats hitting insane returns that outpace the SPY by anywhere from 0.5% to 214.1%. So in all fairness, this top-tier investing is taking place on both sides of the aisle. You should definitely check out their X account as they post yearly updates, and the tweet I pulled is actually from an article talking about it, hence why it's the 2023 and not the 2024 post. So with the foundation of the issue laid out, what's the solution? Introducing the Pelosi Act, or House of Representatives 3388 from the 119th Congress first session. According to the legislation, it intends to prohibit certain transactions and holdings involving covered financial instruments. What are these covered financial instruments, you may be asking? Great question, let's get into it. According to the bill, a covered financial instrument is any investment in a security future, or in a commodity. These are defined under the Securities Exchange Act and the Commodities Exchange Act. So does that mean that all commodities and securities are banned? Not quite. They're actually making exceptions for diversified mutual funds, diversified ETFs, U.S. Treasury, bonds, bills, and notes, and compensation from primary occupation of a spouse or dependent child of the member of Congress. So in short, they can invest like the average person does with their retirement accounts, but so long as they are in office, they cannot trade individual stocks, meaning this would effectively end insider trading in Congress, as they couldn't make any moves on stocks or futures that they have insider knowledge of. So now we know the what, so let's discuss the how. To enforce this, members of Congress will be required to divest from covered funds within 180 days grace period from the time of enactment, for those who are already members of Congress. For those who come into office after the enactment, they will also have a 180-day grace period from the first day in office. So what happens if they don't comply?
Right to jail, right away.
Just kidding, here's what actually happens. If politicians fail to comply, they will be subjected to the following penalties. Disgorgement, which is an absolutely hilarious term that basically means any profits from their failed compliance will be taken and placed in the U.S. Treasury. The second penalty is a civil fine equal to 10% of the covered financial instruments not divested that violate the terms. This fine is to be applied at least once every 30 days until compliance has been met. So in short, they will lose any profits made by these deals and lose 10% of their investments every month until they are in compliance. The next question is transparency. How will people know that they are actually enforcing this law? According to the bill, each supervising ethics committee will publish each fine assessment, the reason for the fine assessment, and the results of each of these assessments on the internet for the public to have access to. Final note from this bill is that the Government Accountability Office will conduct an audit of the compliance of the members of Congress and then submit the report to the previously mentioned ethics committees. So here's my thoughts on the issue. Previously, before I had heard about this bill, I considered ways you could ban insider trading. Once I thought that you could just ban all trading in office, as long as they're in there, but then you'd be preventing them from contributing to a retirement account like the rest of us, so I didn't really have a good idea of exactly what to do. And so ideas that are put forward like this, I really enjoy because it'll prevent them from buying individual stocks or futures that would allow for insider trading, while it still allows them the opportunity to purchase mutual funds, ETFs, and bonds. So I think it's a pretty solid idea, and it makes a lot of sense to me. One thing that is interesting to me, though, that it includes members of Congress and their spouses, so technically it doesn't seem to prevent anything regarding them taking that insider knowledge, giving it to their children or to a relative for them to take advantage of the system. So I would say if this were to pass, I would expect us to see a lot less volume in trading from members of Congress themselves, and potentially an increase in volume from relatives making trades based off the information that they could potentially receive from their relatives in Congress. Is that a guarantee? I can't say for sure, but that is a potential outcome that I see as a result of this. So that wraps up our coverage of the Pelosi Act. If you liked the video, please subscribe as we are just getting started. What are your thoughts on the way this was covered? Too formal? Not formal enough? Let me know in the comments below. Have you got any bills you'd like to see covered? Let me know that as well. Thanks for watching, and I will see you in the next video.